This week, the world's two largest economies stepped right back onto the roller coaster of trade relations. After days of fiery threats, surprise tariffs, and rising market tension, President Trump's tone suddenly shifted from confrontation to cautious optimism. Tonight on Fingro USA, we break down the U.S. China trade whiplash, why rare earth minerals are back in the spotlight, and what it all means for your money.
At the White House, President Trump sounded almost cheerful about Beijing, confirming his long-delayed meeting with Chinese President Xi Jinping is back on.
They're expected to meet later this month on the sidelines of the APEC Leaders Summit, with Trump hinting that a trade agreement or truce could be within reach.
Treasury Secretary Scott Bessent echoed this tone, announcing new rounds of talks in Washington and Malaysia, which sounded like hope for investors.
This optimism came just days after Trump stunned markets with a threat of 100% tariffs on Chinese goods, especially rare earth minerals. These critical materials power electric vehicles, fighter jets, and the very chips inside artificial intelligence servers.
China controls nearly 70% of global rare earth mining and close to 90% of processing capacity.
So, when Beijing tightens export controls or Washington threatens retaliation, the shockwaves hit every major industry. Beijing's latest move involves new export restrictions on critical metals, while Washington considers an even tougher tariff package. It's a high-stakes chess game, with the rare earth sector as the board. U.S. producers like MP Materials and USA Rare Earth saw wild swings this week, with double-digit gains followed by sudden pullbacks, all driven by political headlines.
Every time a White House official sounds optimistic, stocks surge. Every time a tariff threat returns, they tumble.
Welcome to 2025's version of Trade War Roulette. Meanwhile, energy diplomacy added another twist as Ukrainian President Zelensky visited Washington. Trump claimed India would curb its purchases of Russian oil, a potential blow to Moscow's war chest, marking a dramatic geopolitical shift if true. Indian officials aren't confirming this yet, only stating their imports are slowing, but oil, tariffs, and tech are now entangled like never before. One move in one region sends ripples through global markets within hours. Experts say this cycle of escalation and truce may just be the new normal, as both sides are deeply dependent yet unwilling to bend. The US insists on protecting its advanced chip technology, while China resists changing its economic model built on low-cost exports.
Every time a new rule drops, like Washington's 50% ownership clause on chip exports, Beijing hits back harder.
Analysts call it the cold trade era, characterized not by full decoupling, but by endless friction. So how's Wall Street reacting? Investors have learned to filter the noise. The stock market fell sharply on Friday, then roared back Monday as optimism returned. Analysts say fundamentals look solid. Earnings are holding, the Fed is cutting rates, and the economy remains resilient. But every tariff headline still shakes confidence, especially in sectors tied to AI, defense, and electric vehicles. Gold hit another record high, and crypto moved higher too, part of what strategists call the debasement trade, as investors search for hard assets. Long term, Washington is racing to build an independent supply chain, with billions flowing into U.S. rare earth mining, battery tech, and super hard materials. Analysts say America could produce magnets and batteries at scale within 2 years, cutting reliance on Beijing for the first time in decades. But that won't happen overnight, and until then, every headline and tariff threat will keep markets on edge. From tariffs to tech, from oil to AI, this isn't just another trade dispute. It's the battle to control the future of the modern economy. While both Washington and Beijing talk peace, the race for dominance is far from over. Stay tuned. This story is just getting started.
You're watching Fingro USA, where global markets meet real insight. Subscribe now and never miss a moment that moves the world.